Hello traders, welcome to the first episode of the series where I will be passing our challenge account, our simulated account, all the way to life as the CEO of our firm. So you will see the exact process from trading the simulated account, moving into the live account, then managing the live account and going through all the different stages that we have in the career path. Because as you know, with us, it's a little bit different. You wouldn't be stuck in a simulated account and trading that forever. You'll first of all be moved into the live account. And once you show consistency in that live account, we will move additional funds into your account. And that is the way you can grow. So you do not need to trade multiple accounts. You can have one account that you will grow from 3,000 to 10,000 to 25 to 50 to 75 and so on. And I will be going through that exact process here with you. And as you can see, I already have my risk level, some risk levels here defined. Basically, to give you a better idea of what you should be risking per trade, what you should be risking on a day, on a weekly, and what contract size you should be trading with this account. So I have a $3,000 drawdown on my account. A $2,000 drawdown because I'm trading the 50K account to make it a little bit more difficult. The harder account is what I'm trading. And it is harder because I have with this power meters, because I have a lower drawdown, obviously. And that is the account you should be choosing in the beginning. And if you trade it with appropriate size, then it's not that hard anymore. Because the number one mistake, which most traders that come to our firm or traders that trade evaluations in general do, is they just oversize. They trade, contract size that they shouldn't be trading with. And the number one rule is when you are still in the beginning, when you don't have the experience yet, never, ever touch a single mini contract unless you're just trading pure paper trading and you have an account with at least $50,000 available. Everything else does not make any sense. And you can see here, I have different risk levels defined. And risk level 1 is the beginner category. So if you are starting out as a beginner, you should be risking no more from $20 to $40 per trade and $100 to $200 on a day. That is essentially 5 to 10% of risk on a day based on the drawdown, the $2,000 drawdown that you have. So if you are hitting your daily loss limit 10 days in a row with $100, then you still have the account. But what we see most evaluation traders do, or even instant funding traders, they oversize, place 5 contracts, 10 mini contracts, blow the account in the first day trading. And this is not what we want to see. And this is also not what will help you get to life. First of all, you will not make it. And we're also not interested in funding a trader with additional funds if you're just like taking too large of a risk, right? That is not how it works. That is not professional trading. And I'll be basically trading in this series. In the first few videos, we'll be trading the risk category 3 because I'm already advanced. I don't want to go in category 4 because that is just too much risk for the current size because I only have $2,000 of max drawdown available with a daily loss limit of 675 on an higher side. That would be just hitting it like, I couldn't even hit it 3 times in a row. My account would be blown, which would make no sense at all. So I'm trading level 3. I have a daily loss limit of $450. So that means I can hit the daily loss limit 4 days in a row, essentially. And my risk per trade will be from $45 to $90. And I will be trading 3 to 5 micro contracts. I won't be trading mini contracts because for me that still doesn't make any sense with my trading approach. If you are like a high frequency scalper and you just go for like a few seconds in and out for just like 5 points, 4 points, 2 points here and there, then you can trade the minis. But I wouldn't recommend it, even not to an experienced trader. But just to give you the option, I have them on the table here. But in level 1, if you're starting out as a beginner, please start trading micro contracts. Do not trade mini contracts. That's too large of a risk. So now let me remove this and let's get into the chart. So as you can see on the left, I have the 22 range chart with the micro NQ. And on the right, I have the 15-minute at the moment, but I have different time zones there as well. And what I usually do is I go through the higher time frames to get a better idea of what the current market, what the current situation with the market is, and then get into the lower time frames. And here in this series, I will show you how you should start as a beginner, or if you are just at a point where you don't know what to do and you still don't have a clear path, clear plan, clear risk plan, and so on. I will show you how to approach it here. So I will be starting with simple concepts. The trades that I will be going here for are breakout trades and trades at trading specific key levels. That is what I will be watching out here. No complex strategies, not taking any complex indicators into this series, which could just confuse beginning traders. What we will be looking at though is volume. That is one indicator that we will take here, but also not in depth, right? We will just look at the basic volume on the screen. And as we go deeper and deeper in this series, I will show you more and more ways that you can, how you can improve reading the data on the chart to make better decisions. So I will be looking for breaks to the upside and breaks to the downside. So what we will be doing here first is identifying some key levels. So we can see the 90s here, which we just ran into again and moving away from now. So now we could be looking for a potential break through 10, 15 and higher. And I generally also would now go into the higher time frames to get a better idea. So now we can see that we got rejected at 705, moving down again, forming some kind of range right here between 90 and 10. So let's see if we can get a break to the upside through 15. Would be looking for volume that is coming in. But as long as we are moving in this range, I'm not interested in taking any position. So with this one, I have one contract, but I would be looking for 3 because I'm trading the risk category 3, where I can take, as you can see here, 3 to 5 micro contracts. Now I'll be starting with 3 and adding 2 if I have more confidence with the setup. So I've defined the first 2 levels here. And that is what you should be doing in the beginning. You should be just focusing on the different, the easiest way to better read charts, understand what is happening with price is just drawing in key levels and seeing how price reacts to the levels, that you get a better idea of what is happening. And here, the clear thing that you can see is that we're trading between 90 and 10 back and forth in that range. Now we're breaking out to the downside of 90. And then, let's see if we'll move lower, or if we'll move in 90 again. And that is what you should be doing in the beginning. You should be just making sure you get a better understanding of what price is doing on the chart. So I'll continuously get some ideas. You can see here the higher day was 48, so that is a quite important level, but there's already a line, so I don't need to draw it in. Then we have 700, which is obviously important level, which we clearly rejected here, and we broke down through the 90s into 50s right now. Let's see where price is going from here. Then down here, I have the performance center so that you can always see how the trades go. like how the trades went, what my performance on the day is, what the risk I've taken so far is, and so on. It's quite important. I know like some people, they like to hide their P&L because they feel that the P&L is affecting them. But let me tell you something. If the P&L is affecting you, it is not the P&L, just the P&L. The real reason is that you are taking too large of a risk, right? Because if here with the $2,000 drawdown, I would see I'm down 900 on a day, then yeah, it would also freak me out. Absolutely, because I know I'm already down 90% of the total value of my account, right? Of my total balance. Like 50% down of my total balance. That would also put me in a pretty bad state. I wouldn't be feeling well about that. But if I knew I have a total capital available to, like my total risk that I would take with trading, like my total capital available that I can continuously move into my account. Because one thing is important, you should never move all your funds into your account if you're trading a personal account, as an example. If you know that you have $100,000 available, then taking a $900 loss is not that big of a loss, right? But if you know you only have $2,000 of maximum drawdown available, then you shouldn't be taking that large of a risk. So let's see what price is doing here. So we're pulling into another important level right here. We actually broke through that level, which is around 36. You can see that this is a level which we previously rejected quite a few times, and here we found support at that level. If you're looking at the 15-minute right here, that is why I will also draw a line in here, right at 36. With 36. And now we're moving lower. So I wanted to go on a higher time frame. So now we have the 4-hourly right here. Let me take the main template so that we remove that indicator. Don't even know what that was. And so you can see that we're pulling into 600, and 600 is the next important level. I'm first now just watching, because I'm also explaining a lot, and just wanted to get a few thoughts out first before taking any entry, making a few things clear, and I'll be soon taking my first position, because I'm interested in taking a trade right around the 600 being a quite important level. You can also see there's a lot of volume right here. The question is, how low will we go? I wouldn't be chasing it, trying to take a long, but I'm actually a lot of volume coming in here at the 90s right now. And if we see a break through 605, multi brackets, here. Multiply of 5. Okay. I have it set configured. I need to put 15 in here. So we quickly moved into it, but got rejected. But if we get a break of 605, so let me move it to 605, then I'll taking my position, and my stop, I'll be moving it at 285. My take profit would be around the 30s. Because that is the next level, which could be a potential level of resistance right here. We might not even get a break of 30s. Let's move to the 15-minute right here, or the 5-minute. It's better in that case. I think I'd move my take profit a little bit higher and then would rather move my stop. Next level 650s here at this low that we had here. And again, now price sharply moving against me. So I'd be moving my stop closer to my entry anytime, which is right now. Would move it to 600 because we're moving away from 605. And if we would now move into 605 again, I would call my trade as invalidated. So now we will see a break of 30. So now I'm moving my stop into profit and got stopped out for $160 of profits right here. So let me close this order. And now let me explain the trade. So this was a typical trade that I like to take. So I'll give you a better idea of what happened here. Let me go on the 1 hourly. So how I always like to go about it, to make it as simple as possible, right? Because that is what you should be doing, especially in the beginning. I mean, you should keep your trading always. You should be always keeping it simple, right? But especially in the beginning, it's important to not take too many indicators and too many different strategies into your trading plan, because this will just confuse you. You should be taking the simplest concept possible. And once you have proven that you can work with that, then it's about adding more things to get more confirmation. And here, it's all about simple risk calculation that you can make. So you need to think about, if you're taking a position, if you're that initially your risk, like as soon as you place the order, you are taking a risk, and you need to be aware of that there are only two possible outcomes of your trade. You either make profit or you lose. So it's a 50-50 chance, right? That is as simple as, it's always 50-50. If you close your eyes and just hit market order, it's 50-50. But as soon as you hit the market order, you've already lost money because you're paying a fee to the broker. You're paying commission, right? And a fee here. So you're already losing money as soon as you're placing the trade. That is what you need to be aware of. So you've already technically lost the trade, because if you place the order and you have a 50-50 chance, but you already paid commission, then your chance is not 50-50 anymore. It is more like, let's say, 48-52. So you have just a 48 chance because you already paid some commission. Because if you would hit market order and if the price is at break even, if you would sell it again, your position, then you've already lost money, even though the price did not go against you. And what it is then about is making sure that you get more confirmation that the outcome being positive, the probability is higher. That is what you need to look at, right? So if my probability of the outcome being positive is 50%, or let's say 48, then I need to be looking at things to keep it really simple. How can I make my outcome higher, that I will win that trade? And here I took a long position, right? And I already can add a few percentages of my probability by looking at what has happened the past hours or days, right? So let's look at it. What is the current trend? That is what we need to look at. Okay, we are in an uptrend, at least on a higher time frame if we're looking at the 1 hourly, and we're looking at the past few days and also past few hours. So if we look at the past days, we're in an uptrend. If we look at the past few hours, we are in an uptrend. So now we can add 5% onto it. Now we can add another 5% on top of it. Like maybe not 5%, but I'm just talking about rough numbers right now. So now your probability is not at 48% anymore, but now it's at 58% because you were able to add 10%. So now you have a 58% chance that the price will move into your favor. And then it's about looking at more factors, right? So if I would have entered here, right here, when we broke through the 90s to the downside, how likely would it have been that the price will move up again, right? With such an important level that was respected multiple times. We're moving in this range right here, and then we broke down with volume. You can see volume coming in with volume. We broke down with volume. Let's say I went long here. Like, how high is the outcome? That is what you need to look at. You can see, okay, the past minutes on the day and on the past hours, we're on an uptrend. But the past minutes, we are in a downtrend. And now we're breaking down with volume. We're breaking down sharply. Then the chance is not that high that we will just move up again, right? So in this case, I would say the likelihood, it's like 20% that we will go lower. Because short term, we are moving lower with quite some volume. So now we remove 20% from the probability of our trade having a positive outcome. So now we are at 38%. And then you'll think like, okay, no, I should not be taking a long. I should rather be taking a short right now. And yes, if you would have taken a short right here, you would have been good. All the way from the 90s down to the 90s here. So it's a 100-point move down, right? And whether you go short here, 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 you had around 5 minutes where you could have gone short at any point, and the probability of your trade being positive would have been positive, basically, right? So pretty high probability. So why did I then take a long at the 600s? Let's look at it. So if we can see here, we have the pretty important level, the 600. Flat numbers are always levels that are interested for algorithms, but also traders in general, just a psychological thing there, where people could potentially buy. And as you know, we are on uptrend the past days, uptrend the past hours. We have respected the level 600 quite a few times, right? We bounced off of it here, then here. So quite an important level where we could potentially see buyers step in. And as we know, we are generally in an uptrend. So the likelihood of buyers stepping in when we move back to this level is high. So here I would then add 10% again. So now my probability is back again at 48. Still not good enough. That's why I wait, and that's why I don't directly jump into it when we move into the 600 the first time, right? But then I just look at what is happening here with price. And as you can see, a lot of volume is coming in. A lot of volume coming in here. And that then, for me, is confirmation that there is interest. If the volume would be flat, or it would be inconsistent, then the likelihood of this trade working out for me, like going along here, wouldn't have been that high, right? And seeing volume come in, seeing that there are actually buyers interested in that level, that then gives me confirmation again. So I'll add another 10% onto it. So now we are back at 58%. So now even though we are in a downtrend short term, it is quite likely that that the plan would work out here. Then let me first do something because I want to see my fills. Also, I want to see the trade lines, so you can see the exact trade that I took. So, okay, so now we know price will move up, right? And then it's a question, where do I take profit? Where do you take profit, right? Also, so how likely is it that price will go higher than around like the level of 35 to 45? How likely is it that we will move higher than where I took my profit right here? So, well, we can see there was a lot of interest in price right here. So that is another level that we need to watch out for. And that is why I drew this level in. And if we looked on the higher time frame, we could see that the 36 was generally a pretty important level. Also, when we broke down here at 36, there was a lot of volume coming in. So we broke through this level with volume, right? And that's why I took the decision to take profit right here. My idea was, if we move into this level again, I will take profit, because the likelihood of moving higher here is not that high. And if my general probability of the trade working out for me is 58%, then I shouldn't be holding it any longer, right? Because it would be too risky. Obviously, you can see this trade would have worked out. I could have also taken profit here around the 70s. That would have been quite good level. But first of all, I don't see anything clear on the chart for me here. I mean, okay, we can see that a lot of volume came in right here before at the 70s. But this was just too risky for me. And price would have moved sideways quite a bit before actually breaking through the 36. And that is something that you could look out for then, right? Let's say I would have only taken off partials. Let's say I would have taken off 66% of my position. So I take 2 micro contracts off and I leave 1 running. That is something you can do if you're more advanced. Then I would leave 1 contract running, and as soon as price breaks above the level of 36, then that is where I could potentially add again, because this would be a local breakout, right? We got rejected at 36, moved into 36 again, got rejected, but found support right around 15 right here, right? And then we moved towards 36, and actually volume is stepping up again. Volume is stepping up. Can we actually draw on this? I don't think so, right? Oh, yeah, that works. I didn't know that this was possible, because so far for that I've used TradingView if I was looking at it on a higher time frame. But that's cool that this is possible. So it's quite easy for me now to show it to you here, but I think I need to make this line a little bit thicker. Also, let's make it in a more prominent color. Let's just, no, not red. Let's take this, whatever that is. So as you can see, volume is stepping up. Volume is increasing, and we're approaching this level, and we're getting an actual breakthrough. And that is when I could have added and take another position, right? And that is basically, that was the reasoning behind me going along here, taking profit here. So now what we can see is something happened. So we popped up into the 75, got rejected, broke through 36 again. So this level 36, and then broke lower through 15. Now we're back up above 15 and forming a new channel right here. So let's just look at what price is doing right here. So also we will get a new 1 hourly candle. And that is also something that happens a lot, when we approach a new hour as an example. You will see price moving sideways and doing things like that, which are algorithms stepping in and, yeah, basically making sure price is trading within a range. So it's cool that this is actually working with a performance sensor, because then you can see the actual P&L. You can see the fees that I paid, the fees and commissions that I paid on that trade, and so on. So what would I be looking out for right here? So right now I really don't have an idea. So I would just wait. First, I'm gonna wait for this hour to close, and then see how certain levels are respected. And yeah, then again, the main strategies that I will be showing you here, I'm not showing anything complex here in the beginning. I will show you how to read. I will show you how to read the DOM. I will show you how to work with the footprint chart and so on. But in the beginning, I will just show you the importance of volume and simple technicals on the chart, reading the bars, reading the price on the chart. Because that is all what matters in the beginning. You just need to understand that. So what did I wanted to say? Okay, yeah. So this trade was basically two things. So multiple things played into it, as I said, so that I get more confirmation, looking at what the general trend the past days is, what the trend of the day is, and so on. But then, there were just two things that were the main reasons for me even getting the idea of this trade. Which is, okay, pretty important level, 600, flat number, is could be a level of interest. And then looking at the higher time frame, seeing that this has been a level of interest in the past. These were the two main reasons why I came up with the idea. And then I executed the trade. And here, if I would have taken this breakout trade, but I was explaining the previous trade, so I wasn't focused on taking another trade. Here, I could have taken a potential breakout. I love to take breakout trades. And this would have been a perfect breakout for a few points. And here, basically, what I would look for is, okay, as soon as we break out of this range with volume, then I take my position. So now let's see what price is doing. So we quickly moved into 36 again, rejected, moving lower. I would be looking for, I'm still pretty positive, and I would be looking for a break through 36 to the upside, a break with volume. So you can see volume coming in right now here. So I could already take a position right here, but let's wait for what is happening. I need confirmation. It could also get rejected at this level, right? So what I'm looking for is a break through 36 with volume. I will be already placing my buy order right here. And now that I'm already green on the day, and which means for me I can take a larger risk, I would be open to add 2 contracts onto this position if it moves into my favor. But first, let's wait. Let's wait what price is doing here. If we will break lower short term or not. So what I could also do then here obviously is to look for other levels down here where I could be buying. And yeah, let's see what's happening here. Okay, volume is coming in. You can see volume is coming in when we moved into the 90s. Question is, will it break the 90s? A lot of volumes coming in. We broke the 90s to the downside. Question is, will we break lower from here? So here I could take a short right now because we got rejected here with a pretty tight stop. A stop of just 5 points. 5 point stop, not that much risk. But for me, as I'm generally, my idea is that price will move higher today, as I gave you a few reasons to why. I'm not going to do a counter trend trade here and go short. I'm actually looking for price to break through 36. But I could also be taking my position earlier if volume is coming in at an interesting level here. But now I'll just wait. And that is a pretty important thing that you need as a trader. You need patience. You need to be waiting for your positions, not taking too many trades. And yeah, waiting for things to play out. So now we're approaching 95 again. We broke 95. But so far, there's no clarity in price here. We're just moving sideways, and that is a typical situation where with my strategies, where I get chopped up a lot. So I'll be trying to get entries multiple times, and I'll just get chopped and lose some money. And that's why we want to be patient. That's why we want to be waiting. And now I need to show you how you should be doing it. And that is why I will not take a position too early as an example. But if I would trade my personal account as an example, then what I also like is to scale in and out of trades. So like earlier. So I would maybe be taking the risk, but I can take the risk with that account because I have the risk available. But now I'm trading the evaluation account here, not the evaluation, but the simulated account. And I can't take the risk because the maximum risk I have here on that account is $2,000. My account will be gone if I lose more than $2,000. So I need to be, really patient. We might not even take another trade today if price continues doing what it's doing right here. I mean, what we also can look at, if we look at a higher time frame just to continuously do some analysis, we can also see a double top right here, right? At the 50s. Meaning that, buyers were not that strong to just break through the 50s here. Let's see. So here a lot of volume came in right at the 80s. So if we now break, because of the volume spike that we got there, if we break through through 14 here, through 14 or through 14, 15, I would be already taking the position. And now I can also then set my stop right around the 90s right here, which would work pretty well. So now I'm moving my stop here at the 90s and see what price is doing. So it's now moving against me pretty quickly, short term. Let's see what's happening. And then if we break through 36, that is where I would add onto the trade. But let's first wait and see what happens here. A lot of volume coming in. Looks like I will get stopped out anytime soon. Definitely don't like the price action, but I always like my trades to play out and do its thing, right? Even if we're now moving in that range, I'm not going to move my stop loss or not going to just exit. You know, we moved close to my entry again right now, and I could have just exited. because being scared at now I'm back at break even, now just let's exit out. But I'll let my trade play out, right? Because I already calculated the risk. I already know what the risk with this trade is, and either the trade works out or it doesn't. If it works out, all good for me. If it doesn't, also fine, right? I had already calculated the risk. So now it's all about just patiently waiting for the trade to either play out or not play out. So now we need to be more cautious because we're now above my entry and we're approaching my second entry where I will be adding 2 contracts. And now we would need to look for potential profit, take profit levels, and also potentially move the stop loss closer to my entry, and that is all about trade management. Because, as your trade is playing out, you continuously need to monitor and manage your trade. Pretty important. That is why you need to stay in front of the screen. And that's why I don't like, the new thing a lot of people are doing, which is mobile phone trading. You're just trading on your mobile with TradingView and stuff. Not really my thing. I like to manage my trade. I like to be in the action. So, like if you're swing trading, it's something different. But yeah, let's just see what happens. A lot of volume is coming in here, which is why I'm not touching my stop loss and anything here. Price is moving up and a lot of volume coming in. Now I just want to see level 36 to break, so that I have a full position of 5 micro contracts per account right here. So let's see how price holds here at 15. So I'm soon considering moving my stop closer to my entry, because now we moved back into the level of 15, like where my entry was. And if we now move away from my entry to my second position with volume, then we shouldn't be moving back into 15. That is how I go about it, because that would kind of invalidate my trade if we break it. And that is when I would like to have my stop loss right there. But now that hasn't happened so far. We actually broke 15, moved into 5 right now, 605. Let's see what it's doing here. I'll just wait. Price is not that clear to me here, so I'll just wait. Either get stopped out or get my trade to work out. Can definitely also move in a different time frame. I mean, we only have the hourly on right now. If we would look at the 50-minute, which I should probably have done, would have maybe gotten a different sentiment on the trade here. So now we got stopped out. Now we're kind of at break even on the day. But the trade idea was there. Obviously, I could have taken profit already here at 35, but I was looking for a little bit more. And yeah, that's just how it goes. And so let's see what is happening right here. First of all, I will configure that I have the correct position size again. And now it's all about just, watching again. Next important level are the 50s, where we are at right now. Actually, really important level. So same thing again. I'd be first going on a 5 minute, so I get it into a smaller time frame. So now I'll be just watching how price reacts at this level. we're looking at volume. Because my trade, I still have my trade idea that we will, and I'm still biased towards going long on a day. So volume is coming in right here. So if we get a break through 55 here at this point, that is where I would be interested in taking a long. But not before that, at least at the moment. But for now, I will just watch. Just watch what price is doing. I might like enter at an earlier position. If price wants to move lower here. But yeah, break through 55 into 85 could be a potential trade opportunity. But before that happens, I'll just watch. Or wait for a new setup to occur. So here again, it's just about being patient, just waiting. So in case we do break through 55, I would set my stop around the 40s. So we have a 15-point stop. So we quickly tipped 55. I'll be moving my stop to 31st. Wait, to 31st. And then would move it further to 40, which I said was my the place where I'd set my stop. Now I'd be watching out for a take profit level, which would be right around the 80s. But I'd also move my stop closer because I don't really like how price is reacting to that level. And if we would break 70, I would move my stop loss into profit and actually move my take profit higher. Now I'll continuously move my stop loss with the price going higher. I'll trail my stop But that is what I usually do manually. Now I got stopped out. And good. Now we're back to 160 on a day, right? So that is also it for the session. So we had 2 winning trades, 1 losing trade, all trades managed pretty well, and not a lot of risk taken. And that is how you should do it, right? Obviously, it will take longer to reach the target if you trade small contract size, such as the micros. But especially if you are trading with our firm and if you are trading an instant funded account, there is technically no target that you need to reach, because all the profit that you generate as soon as you start trading that account, you are able to pay out, right? There is the profit target, the cap on the account of $3,000 that you can reach, that you basically need to reach before being moved live. But you can still take a payout. This doesn't mean that your time was wasted, which was usually the case when only trading evaluation accounts. Because if you would only trade evaluation accounts, you would first need to hit the evaluation account target before you're moved into the actual funded account. But that is different when you trade with our firm. So if you're interested in joining our firm and going through the entire career path to becoming a professional trader, then click on the link below. Definitely happy to have you on the team and teach you what we do here. And again, let me quickly go over the trades really simply. So the first trade we took was of 600, a small 30-point trade into 630 into the next resistance level. So a typical trade off of a support level. Then the second trade that we wanted to take was a breakout of 615. The breakout happened, but we got rejected at 35. I should have already taken profit there because that was the level that I previously defined as a level of interest. But I wanted to take the risk with this trade. I wanted to take it, to let this trade move a little bit longer, which obviously, as you know, didn't work out quite well here. And yeah, got stopped out. But also reasonable loss right here was just how many points? Yeah, I mean also right around 30 points because we were on break even on the day. And then finally, next trade was moving into the 50s. I saw opportunity. I saw that 50s was a level of interest. So yeah, waited for volume to come in, waiting for a break through 55. And as you can see right here, volume definitely came in. The bars are getting higher and higher and higher. And here it's pretty strong one. And now we actually broke above 600 again. Pretty good. So we could be looking for more potential longs around this area here if price pulls back into it. And yeah, these were the trades basically. And then as I said, you have the option to join our firm, but you can also join our professional trading desk directly. In order to join the professional trading desk, there's also a link in the description where you can apply. You can just send us your past trade data, an application. In that application, we don't need any information regarding at what school you went or what university. The only important thing is your trading performance and where you are currently at with your trading and what it is that you want to achieve. And then, we can look if we move you to our desk and train you. You'll be trading in a simulated environment first, but it's all free. You don't need to pay a single dollar. You will trade in a simulated environment. You will also not earn anything in the first month. It's just you trading. And once we see that you're good enough, we'll move you into a live account. So if you're interested in joining the trading desk, my trading desk, you'll be trading with me, then you can do that as well. Other than that, wish you all a good, successful trading sessions and more to come about this series. So day 1 is done now with $160 in profit, and was a solid day.